What's going on, everybody? What's going on, everybody? We're back at it again on a Wednesday. Another Wednesday of the Trade for Yourself podcast. What's good, everybody? Hope everybody is doing well. I appreciate y'all for bearing with me as I get everything set up. What's going on, everybody? What's going on Instagram? I hope y'all are doing well today. Today is a perfect opportunity to make building wealth a priority for your life. Say it with me again. Today is the perfect opportunity to make building wealth a priority for your life. Understand that. Like really, truly understand what that means. Really, truly tap in. Let your mindset really, truly let that flow through. Understand that today is the perfect opportunity for you to make building wealth a priority for your life, for you to accomplish the things that you want to accomplish financially by really, truly putting the work in, becoming successful and doing what it takes. So for everybody who don't really know who I am, I'm going to introduce myself again. My name is Devon Elder. I'm an investor. I'm a 28-year-old civil engineer, and I created the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So please like, please subscribe, please share the episode. Okay, this really truly helps me in the algorithm. It really truly helps me get out to multiple people. Okay, so hit the notification bell also so you can be in the know. So every time I go live, I plan on going live more so I can give more information to the people so y'all can really truly tap in to get the information that you need. If you like my t-shirt, okay, the don't pay for it, trade for it t-shirt, please go to www.tradeforyourself.com to get over there and look at the type of merch that I have. Okay, we're doing free shipping on all orders. So please go to www.tradeforyourself.com, free shipping. If I'm adding any value to your life, you know what I'm saying, just go over there and patronize me one time. Just patronize me one time. I would really, really, truly appreciate it. So from the title of the video today, also before we get into anything, okay, this is meant to be a live interaction, okay, a live interaction. And so I really want to use this as an opportunity to give you all the information. So if you have any questions, okay, reach out to me in the chat. Put any questions that you have in the chat. We understand that we're talking about Nike stock, but if you've got some questions related to Nike stock, or if you have some questions that's not related to Nike stock, this is your opportunity to tap in. Okay, this is your opportunity to get your questions answered so we can get you further down the path to really truly making building wealth a priority for your life. So reach out to me in the comments. So let's not waste any more time. Let's go ahead and get into it. You know, should you buy Nike stock right now? Okay, Nike reported their earnings, their Q4 2022 fiscal year earnings on Monday, and they reported better than Wall Street had anticipated. But still the stock had dropped due to guidance, so forward guidance. So pretty much management came out there and they said, look, right now we're doing well right now, but we've got some reservations about what we can do in the future. So understand this really quickly. I'm about to share my screen real quick, and we're going to go through some articles. We're going to go through the earnings report, and we're going to really truly see where is Nike stock really primed to go in the future to give you a really truly give you something good that you need to really take so you can take home. Give you something good that you need to really take so you can take home. So you can take home and let people know what you need to do. Now, I'm going to go over here. We got Nike stock. Nike is trading for, it closed at $103.25 today. So right now we're going to start over here with Nike's earnings top Wall Street expectations despite inflation in the US and COVID lockdowns in China. Okay, so a lot of things have been going on. Okay, so Nike said that demand for sneakers and sportswear largely held up in fiscal fourth quarter, despite a COVID lockdown in China in a tougher consumer environment in the United States. The company said that challenges such as higher transportation costs and longer shipping times are persistent. Now, understand this: the major manufacturing wing for Nike is located over in China, and related to the pandemic, it pretty much costs 5 times for you to send a shipping container across the Pacific from China over to California. It's 5 times as high as what it was pre-pandemic. So that's really truly eating in the margins. Okay, so a lot of things are really truly hurting Nike temporarily, but all of these things that are hurting Nike are temporary things. Okay, so understand this: inflation. Okay, we have high global inflation across the board. That is eating into margins, eating into cost. Okay, eating into the ability for them to be able to do that. All right, understand that they've got an issue with supply chain shortages and COVID lockdowns. China has had mandatory COVID lockdowns, and that has affected about 60% of Nike's business. Okay, so with that being said, we understand that COVID will eventually die down. Eventually, globally, eventually COVID will die down, and Nike will be able to get everything operational. Nike said on the most recent earnings call that their China-related manufacturing is now up and running. That's a good thing. That's something that we need in order to have growth moving forward. So we've got COVID disruptions, we've got supply chain shortages and supply chain disruptions. All of those things are temporary. Now, understand this: everything that is hurting the stock right now is going to put a damper on the stock for this year, for 2022. However, that damper on the stock is really truly going to give you an opportunity to add to your position over the long term. On top of that, Nike really truly has a dividend, okay, has a dividend on top of that. So let's go over here to Nike's investor relations so we can really truly dive through the news, dive through the report, and really truly see what we need to take from it. So fourth quarter reported revenues were 12.2 billion, down 1% compared to the prior year and up 3% on a currency neutral basis. Nike Direct. So Nike Direct is Nike's direct to consumer model. Pretty much your app. So your sneaker app, where you had your Jordan releases every single Wednesday, and your Nike app in general. Okay, that's your Nike Direct to consumer. That is what the growth is for Nike. Being able to cut out the middleman and sending it directly to you. That's what you got to look towards. Okay. Nike Direct reported revenues for the fourth quarter that were 4.8 billion, up 7% compared to the prior year and up 11% on a currency neutral basis. So Nike Direct is still positive for the business. Okay. It's still positive for the business. It's just these macro related headwinds are really what's hurting it. Wholesale reported revenues for the fourth quarter were 6.8 billion, down 7% compared to the prior year. Okay. Gross margin. So the profit. So the gross margin for the fourth quarter decreased 80 basis points to 45%. Okay. So what does that mean? That means that gross margin this time last year was 45.8%, and it decreased to 45% in a whole. Now that's a big deal. Now, a lot of people may say, man, 0.8%, is that really truly a big deal? That can really truly take away some of your profit. Okay. And we're going to look at that down in the balance sheet. Diluting earnings per share were 90 cents per share. And understand this: Wall Street expected them to have 81 cents. So Nike is still delivering on Wall Street expectations. Nike has had 7 straight quarters. There have been 7 straight quarters where they have been able to over deliver in relation to what Wall Street said they were going to do. And the last thing that's really got me excited: the company announced its board of directors has authorized a new 4-year, $18 billion program to repurchase shares of Nike's Class B common stock. Now, understand this: when you're investing in the companies, okay, you want to invest into companies that are adding value back to shareholders. You add value back to shareholders by increasing your revenue, okay, increasing your revenue, also increasing your profit, making sure that you have a good business model, making sure that you have a competitive advantage, making sure that you are able to provide value to shareholders in the terms of paying a dividend, paying a quarterly dividend, and continuing to increase that dividend. right? And also buying back shares, okay? Especially if you're buying back shares when the stock is discounted at $103. I believe the stock is discounted, and we'll get into that as we move forward. Nike's results this physical quarter are a testament to the unmatched strength of our brands and our deep connection with consumers, said John Donahoe, president and CEO of Nike. Our competitive advantages, including our pipeline of innovative product and expanding digital leadership, prove that our strategy is working as we create value through our relentless drive to serve the future sport. Now, I really want to go through this real quick. So I listened to Nike's earnings call. There are three growth levers, okay? Three main growth levers that's really going to take Nike to the next level. Number one is a strong brand that deeply connects to consumers. Understand the Nike brand. Understand that Nike owns the Jordan brand, okay? We know how big the Jordan brand is and the Converse brand. Nike actually owns Converse. And Nike is continuing to double down on that in America. Double down on that in Europe, double down on that in Greater China. The Nike brand is a very, very strong brand, one of the biggest brands in the world. So really, truly understand what that means and it being able to connect to consumers. Also, on top of that, second thing is the innovation of products. Nike is rolling out some new technology for their shoes in September. And Nike says that the shoe product will be revealed in September and it's going to reduce carbon emissions. You're going to be able to produce shoes without the use of water and the use of dye. So this is very, very interesting. I'm waiting on September to really, truly see what Nike has for me in this area. And number three is connecting to consumers directly, digitally. Nike Direct, like what I was just talking about before, connecting to consumers digitally, understanding that you have to be able to get the eyeballs of the new generation. You want the new generation. You want Generation Z, and you want the generation after them to really truly be tapping in. Okay, Nike has a NFT partnership in China, digital, right? Understand that. Nike has partnered and created a song that went #1 on TikTok. Okay, that's going to get you in front of the eyeballs of the new generation so they can really tap in and be connected to the brand. Okay, also on top of that, one last thing I want to say, Nike says that they have technology that they will be rolling out in July in China that will allow them to have a real-time vantage point of the supply chain and product inventories. So pretty much right now, Nike has been going through a lot of turnover, and they've been going through a lot of supply chain problems. But this new technology will be able to give them the ability to anticipate that better. And they've been investing money into the business. Understand research and development, R&D. Nike is a growth company. So this is the thing. You have to have a good, nice balance. You want the company to be buying back stock and adding value to shareholders. But if you're a growth company, you also need the company to be researching and developing over here, investing into your products, investing into your business that can allow you to grow your business and be able to have growth, have more revenue, have more profit down the line. So let's go through the report a little bit more, okay? Fourth quarter Nike Direct, which is your digital, grew 7% on a reported basis and 11% on a currency neutral basis, led by 25% growth in EMEA. That stands for Europe, Middle East, and Africa. 43% growth in APLA. That's Asia Pacific and Latin America, and 5% growth in North America. That's over here in America, right? Partially offset by a decline in Greater China. Nike brand digital grew 15% on a reported basis and 18% on a currency neutral basis, driven by double-digit growth in APLA, North America, and EMEA. Okay, so understand this. Double-digit growth is what we need to see from businesses of this size. You need to see that double-digit growth. That's really, truly what's going to get you to that next level. Hey, I appreciate everybody that's tapping in on the live stream on YouTube. Please like, please comment. If you got any questions, please let me know. Everybody on Instagram, I appreciate you. Please come over to YouTube so you can get an immersive experience over here so we can go through as I share my screens and everything. So now, The fourth quarter results contain several non-comparable items, including non-recurring charges recorded in other income and expense, net totally approximately $150 million, associated with the deconsolidation of our Russia operations and the transition of our businesses in Argentina, Chile, and Uruguay to strategic distributor models. Now, this was $150 million that hurt the bottom line, but it won't be occurring again. Many American companies have said that they are going to remove themselves from Russia, because of the Russia and Ukraine war. I believe Starbucks said that they were going to be removing themselves. McDonald's said that they were going to be removing themselves. Nike is removing themselves. I'm not sure if Apple said that they were going to be removing themselves, but we understand what's happening in the global economy. So that's not really truly something that I'm really truly worried about. I understand what's going on. Now, revenues for Nike Incorporated decreased 1% to $12.2 billion compared to the prior year. Now, this $12.2 billion was still better than what Wall Street said that they could do. Revenues for the Nike brand were $11.7 billion, down 1%. Revenues for Converse, $593 million, down 1%. We understand that. Now, this is something. Now, these next two paragraphs are very, very important, and I really, truly want to highlight this for you. Gross margin decreased 80 basis points to 45%, primarily due to higher inventory obsolescence reserves in Greater China and elevated freight and logistics costs, partially offset by strategic pricing actions, favorable changes in net foreign currency exchange rates, including hedges, and margin expenses in our Nike Direct business. Okay, so we've had, like I said before, like I'll say again, I really truly don't want to keep harboring on it, but we have to. We understand that China had the lockdown. We understand that supply chain logistics and supply chain issues, the cost to move freight over the Pacific, that's a problem. But they're all temporary problems, in my opinion. So you've got to have a long-term horizon if you're going to invest in this stock. Okay. The selling and administrative expense increased 8% to $4 billion. Demand creation expense was $1.1 billion, up 6%, primarily due to increased sports marketing expenses and continued investments in digital marketing to support heightened digital demand. That's what we need, investment in the business. Operating overhead expense increased 8% to $3 billion due to higher strategic technology investments and an increase in Nike Direct variable costs and wage-related expenses. Okay, we need investment into the technology. Understand that. That's what we need. Net income was $1.4 billion, down 5%. We understand all that. Okay, we've been through that. We understand all of that. Now, that's just for that last quarter. Okay, that was just for Q4. So let's talk about how did Nike do for the entire year, because their physical calendar is a little bit off from the normal physical calendar. So for the entire physical 2022, okay, revenue increased 5% to $46.7 billion, right? So revenue still increased year over year. Revenues for the Nike brand were $44.5 billion, up 5%, still increasing year over year. Nike Direct revenues, they were $18.7 billion, up 14%, on a reported basis, okay? Led by the Nike brand digital growth of 18%, and Nike owned stores were up 10%. Like I said, the major growth driver is direct to consumer. It's increasing from a double-digit perspective. Understand that, okay? Gross margin increased 120 basis points, primarily due to the margin expansion in what, y'all? Like, I really, truly hate sounding like a broken record, but they're giving it to you right here. They're giving it to you right here in our Nike Direct business. They're telling you, you want business. This is the thing. You want to be investing into a business that knows their strategy, that's not deviating, that understands, look, these are our growth drivers. We understand that we have a strong brand globally. We understand that we have new technology that's going to be rolled out in our women's shoes and our Jordan shoes. And we understand that the digital age, understanding that the digital age is going to get us to that next growth level. Okay, that's what we understand. You want businesses that know themselves. Businesses that know themselves is what's truly going to get you. If you wear Nikes, you should own the stock. You are right, Chris. If you wear Nikes, you should own the stock. Now, I'm just going to go ahead and tell you right now. I was going to tell you later. I'm going to go ahead and tell you now. Nike was not a company that I was anticipating on adding to my portfolio. I'm just going to be honest. But the fact that the stock has decreased so much, and I've done so much research and I understand the business, and the fact that I like the product, I wear the product. Look, when I bought 2 shares of Nike today. I bought 2 shares of Nike today before the market closed. Those 2 shares of Nike that I bought were less than 1 pair of Jordans. I'm going to say that again. For all your Jordan 1 wearers, your Jordan 3s, your Jordan 4s, your Jordan 11s, you win like 96s, okay? My Jordan 12 people, understand this. The 2 shares that I bought 2 shares. That's combined. That combined purchase was less than a pair of 1 Jordan, okay? On top of that, if I reinvest my dividends, the company gonna pay me a dividend over the long term. Understand that. Understand that you need to be investing. Understand that you need to be investing into the products that you use. Okay. Understand that. Make building wealth a priority for your life. That's really what I can really truly tell you. So now let's go down to the balance sheet. The balance sheet, the balance sheet has to be solid. If the balance sheet is not solid, we can't invest into the business. I don't care how much I love Nike or whatever, or how I use the products, the balance sheet's got to be solid. Okay, so the inventories for Nike were 8.4 billion, up 23% compared to the prior year period, driven by elevated in-transit inventories due to extended lead times from ongoing supply chain disruptions. Okay, whatever. Cash and cash equivalents and short-term investments were 13 billion. Okay, they were 13 billion, 479 million lower than the prior year, as free cash flow was offset by share repurchases and dividends. Okay, so but $13 billion is still strong. It's still strong from a cash perspective. Nike's got a lot of cash. Okay, so Nike continues to have a strong track record for investing to fuel growth and consistently increasing returns to shareholders, including 20 consecutive years of increasing dividend payouts. So you're getting a guaranteed dividend with this company. This company is getting close to becoming a dividend aristocrat, I believe. You got dividend aristocrats and you got dividend kings. One of them has been paying dividends for 25 years. Another one of them pays dividends for 50 years. Nike's a business that was created over 50 years ago, and they understand what they're doing as a business. So let's talk about what they returned to shareholders. They returned approximately $1.5 billion to shareholders, including $481 million in dividends, up 11%, double digits. And your share repurchases were 1.1 billion, reflecting 8.5 million shares retired as the part of that previous 4-year, $15 billion program that they approved in June 2018. In the entire fiscal year, though, the company returned approximately 5.8 billion to shareholders, including 1.8 billion in dividends, up 12%, another double digits, and 4 billion, reflecting 27.3 million shares retired. As of May 31st, 2022, a total of 77 million shares for 8.7 billion have been repurchased under the current program. That's how you add value to shareholders and being consistent with your program. Now, we talked about the different levers. Okay, we talked about the different levers. We talked about what's going to be there for growth. Okay, we understand this. So let's go down here. One thing I want to talk about is I want to talk about the breakout of, I really truly want to talk about the breakout of the revenue. Okay, so you got revenue in North America. Your revenue in North America had about 5.1 billion, and it's down 5% year over year. We understand the issues with inflation. We understand the cost to bring those goods over here. But your Europe, Middle East, and Africa division gave you 3.2 billion. That's up 9% year over year and up 20% from excluding currency exchange rates. That's pretty good. So pretty much what Nike is doing is Nike's having another lever over here in Europe, Middle East, and Africa. Now, Greater China got you 1.5 billion, down 19%. But we understand why, though. That's why we have to put our investor hat on, and we have to understand why this is happening. This is happening because of COVID lockdown and supply chain shortages. And in the last division, you got Asia, Pacific, and Latin America, 1.6 billion. up 15% year over year, and up 24%, not including the currency exchange. So imagine this. Think about this right now. When we get everything rectified over here in North America and get our inflation and our costs down, okay, you've increased your growth lever over here in Europe. Once we look, the China having those lockdowns affected 60% of Nike's business. Let's call a spade a spade. It affected 60% of the business. Once you rectify Greater China and you've got these two wings over here in Europe, Middle East, Africa, Asia Pacific, and Latin America, this company is primed to continue to outperform. It's primed to continue to outperform based on how these metrics are. Now, one last thing. Let's go through the entire balance sheet very quickly. Really quickly, I want to tell y'all this. So your current assets and your current liabilities. Let's go through that one last time. Let's go through that. Let's jog our minds again. What is the definition of that? Total current assets, the money that is due to the business within the next 12 months. It's money the business is due to them. Total current liabilities, the money that is due out of the business over the next 12 months. So you've got about 28.2 billion in current assets and 10.7 billion in current liabilities. Okay, that's over 2 times. You got more than 2 times worth of assets versus your liabilities. That's good strength. On top of that, let's look at our long-term debt. I got to look at the debt of the business. We've got 8.9 billion in long-term debt. But if you add the cash and the cash equivalents plus the short-term investments, you've got $13 billion in cash. So in a worst case Armageddon scenario, if they needed to pay down some of that debt, they can use that cash and those short-term investments to cover that debt. So the balance sheet is very, very solid for the business. Now, I want to keep moving. I want to keep going forward. I want to talk about the annual earnings and estimates, okay, the EPS, the amount of income, the profit that we're adding to the shareholders year over year, okay? For fiscal 2022, Nike reported $3.75 per share from an EPS perspective. In 2023, they're expected to increase to $3.99, 2024, $4.75, in 2025, $5.66. So understand, over the next 3 to 4 years, that annual EPS trajectory is increasing. That's why that we have to build our position now while the stock is down. You have to build your position now while the stock is down. By 2025, the company is projected to have over $60 billion in revenue. Right now, the company is only giving you $46.5 billion in revenue. And they're going to increase that to 60 billion over the next 3 to 4 years. That's something that entices me. Also understanding that the company is also going to continue to increase my dividend. I reinvest my dividends. I reinvest my shares. That's going to continue to allow me to buy shares. A company like this is really, truly making me attractive. Now, one last thing before I get out of here. Remember, please, anybody, please, if you got some questions, reach out to me in the comments. This is an opportunity for me to add value to everybody that's on here, because I really, truly want y'all to know what y'all are doing. Okay, so let's look at the chart. Okay, we got to look at the chart, the technical analysis. Okay, so we're looking at TradingView. I like using TradingView. This is very, very good. Now, this is a year-to-date chart for Nike. Okay, year-to-date chart. We're looking at Nike is down. We're in a defined downtrend, a series of lower highs and lower lows, right? We're in a defined downtrend, and Nike is suffering from that. We hit another 52-week low this morning, $101.53. That was a 52-week low, but that's not bad, because in certain aspects, when you have strong businesses and when you're trying to invest into the S&P 500 outright, you want to be investing at that 52-week low if the fundamentals of the business are solid and they have not changed. So let's look at Nike on a weekly time frame over a 5-year period. The stock is still moving up and to the right. Even the big drops and the big downturn, the stock is still moving up and to the right. If we look at this from a technical perspective, from June 2017, even with this big drop, because Nike stock is down more than 40% from its all-time high, the stock is still up over 75%. It's still up over 75% over a 5-year period. Now, understand this: these returns are not guaranteed. But if we move from 75%, if you took profit up here, when the stock was at 179, this stock was up over 200%. This stock was up over 200%. Look, Nike is going to get back here. I'm not telling you it's going to get back there tomorrow. I'm not telling you it's going to get back there next week. I'm not even telling you it's going to get back there next year. But what I am telling you is that I understand management. The company has strong management, and I understand the strategic levers for growth. And I believe in the business, and I understand that it's a strong business. It has a solid market cap, solid dividend. Now, this is what I want to show y'all. So the buy-in price. So let's answer the question. Should you buy Nike stock right now? Like I told you earlier, I bought 2 shares today. I started a position in Nike and I bought 2 shares today. Now, what makes me feel good about buying the stock right now? From a technical perspective, really, truly, what makes me feel good about buying the stock right now? From a technical perspective, using my Fibonacci retracement tool. So the Fibonacci retracement tool is designed to give you areas to buy stocks when they're discounted. So to draw your Fibonacci retracement tool, what you want to do is you want to start at your all-time high, right? So our all-time high is 179. We want to come all the way down to a major low. Our major low is when Nike dropped down to $60 during COVID-19, during March 2020, when the market really truly depleted. It came down to $60. Now understand this: a major discount that we normally look at is when the stock comes to 0.5. That is related to a 50% retracement. Okay, 50% retracement. And now that was 119.62. The stock still depleted down, and it came down right here to 0.382. That's a 38.2% retracement. We're really right in line with that. Okay, so that makes me feel good. That makes me feel good about starting a position right here. Also, understand just the fundamentals of technicals. Understand the basics and the fundamentals of technicals, support and resistance. Let me go ahead and delete the Fibonacci. Understand support and resistance. So right here, we came down. Our 52-week low is $101.53. That's our 52-week low. So that is something we could consider support, because we have not came below this level in a while. It's been a long time. So we can really truly consider that support. And when you look at other areas, you can see you've got some demand for buying shares. Support is where people are coming into the market and buying shares. Resistance is when people are leaving the market and selling their shares. You reach a point and you come right back down. But what was previously resistance now comes support. So this level right here, this 101.53. Now this is a weekly chart now, and let's go back to December 2019. This coincides with a previous all-time high for the stock. So we are right now in line with the previous all-time high that was deemed resistance. Okay, so that makes me feel good. So we've got our Fibonacci retracement at a key level. We're at support that lines up with previous resistance. Okay, on top of that, understand how much has the business grown over the last 2 years. If you just look at this from a technical perspective and look at the chart, if Nike is trading lower than where it was trading in January 2020, that is the market giving you a price claiming that Nike's business is weaker and Nike's business is not performing as well as it was performing 2 years ago. We know that's false. We know that is cap. That is cap. Okay, we know that Nike has a bigger business than what it had 2 years ago. And we understand the growth levers, 3 growth levers: strong brand recognition, technology into the shoes, understanding that we're connecting directly to our consumers, the Nike Direct, the digital. We know the business is bigger. I don't even got to look at the numbers. I don't even got to look at revenue. We can go look at revenue. Yeah, let's look at revenue. Let's look at profit. Let's see what they were doing in 2020. But we know that they're doing way better than. Look, the amount of inventory that Nike has is surpassing what they had pre-pandemic. That's an asset on the balance sheet. We know we can get off of that. We know we can get all of that if we need to, right? So I went through Nike. I broke it down. I hope y'all really, truly appreciate that. Like, thank y'all for tapping in with me. Please like, please subscribe. Remember, www.tradeforyourself.com to get your personal t-shirts. Get you 2 or 3, like do whatever you need to do, okay, to really truly tap in. I'm just playing with y'all, man, but I really truly appreciate it. One last thing before we get out of here. One last thing. We got to look at the economics because we know we're in a bear market, but what's going on that we need to tap into? So tomorrow we've got PCE inflation numbers. PCE stands for personal consumption expenditures. This is the measure that the Federal Reserve uses to decide how they feel about inflation and also how they are going to raise interest rates over time. Keep this in mind. If this number is high, expect the market to come on down. If it comes on down, it's going to give you an opportunity to buy Nike at a lower price. If this number is not as bad as what people are anticipating, it's going to give you the opportunity to, you know what I'm saying, be nimble, understand what's going on in the market. Next week, we got 4th of July Monday, so the market's going to be closed. We've got our payroll numbers on Friday. Job number Friday, next Friday. I mean, it's gonna be a big deal. People are gonna be talking about it, but the main thing is inflation. What is inflation doing? That's what's gonna get us on this next leg up. The next leg up is gonna get us on this next leg up is gonna be understanding that we need to control inflation. So I appreciate y'all again. Please like the video and remember, don't pay for it. Trade for it. But tap in with y'all on the next one.